First presenter for the session, Susie Stannard from AHDB. Welcome, Susie.
Hello, thanks very much, Laura. As mentioned, I'm going to cover what is going on in dairy markets, what's happening to milk prices, and what we think the outlook's going to be in the coming months and years. So just to introduce myself, so I'm Susie Stannard and I lead the dairy market specialist team at AHDB. My role is very much about, we collect evidence from various sources, we analyse and interpret that evidence, and we really aim to then communicate that out to as many people as possible, so that all parts of the supply chain have access to good quality, transparent data. If you're interested in markets, please do sign up for Dairy Market Weekly if you haven't already, where you'll get these sorts of analysis direct to your inbox on a weekly basis. So I'm going to start off really with the crux of the matter, which is really that there is still far too much milk, both in GB and internationally. So if we look at the amount of milk that's in the UK at the moment, we're very much in serious oversupply. So the line in blue below shows you milk production, daily deliveries going throughout the year, and you can see compared to the 5-year average, which is in green, and last year's milk production, which is in the sort of black line, all year since really sort of September, October 2024, we've been running well ahead of the year-on-year story. That has peaked at sort of higher levels through the year. So if we look back to October, we were running at almost 7% up year on year. That has slowed down a little bit now, in that we're still in strong growth, and we are also annualizing against what was a very strong period already last year. So but we're not sort of up 7% anymore, it's more like sort of 3.4%, but because we were already very strong, or well up on the 5-year average. So GB milk year to date is looking at 5.5% up, and it's even slightly stronger for the UK as well. What does that much milk look like? For just GB milk year to date, so that's from April last year through to now, we're looking at about 525 million extra litres. If you put all of that milk into tankers, that would be an extra 18,103 extra tankers. And if you just process that into liquid milk, and you took your typical per capita consumption, that would be enough to supply an extra 7.5 million people with liquid milk for an entire year. So it's a huge amount of milk, which goes into a huge amount of commodities, which are all building up, which is what's causing this market situation at the moment. And we typically do see a high degree of volatility in dairy markets, but I think the situation is even worse this year. And what's been driving that is that we've seen feed prices being historically quite low. So you can see in the graph on the left there where those have been sitting at, and milk prices were historically high. So if you look at the milk prices over time, we saw that very large peak back in 2022, and then things fell away again. But since then, they've been building up and have stayed high really throughout 2025. Until we started seeing milk price announcements, some in October, but the bulk happening in November, where we started to see some really big drops. As you can see in the dotted line below, we've got the GB all milk 5-year average, and how that's trended over time. And it has come up over time to a large extent. The 5-year average from November was sitting at 40.04, and the 3-year average milk price at 42.34. So I mentioned that feed prices have been historically low, and because those milk prices were high, that has encouraged farmers to utilise more feed. And you can see this here. So this is data that comes from GB animal feed manufacturers, and you can see here that production of dairy compounds and blends has been the highest on record for this year. So so up until November time. It's interesting, if you look back historically, the last time we saw similarly high levels of feed being used was back in 2018-19, and that was actually another drought year. So we know back in the summer, depending on where you were in the country, but a lot of the country was very badly afflicted by drought, which actually drove a need to feed more concentrate feeds as well. So I think that sort of added to the situation as well. And if you look at what's happening over time with that use of feed, you can see here the line in black is where we are right now. We've been well above previous years and well above the 5-year average for most of the year, and it's only just been just now, as we hit sort of November time, that we've started to see that feed usage come back more in line with sort of historic averages. So that might be signs of production starting to slow in the coming months. If we take those two factors, so if we take the milk price historically and we take the feed price, and we can create a ratio, which is our milk to feed price ratio. And that's quite an important number because it tends to give us an indication of what might happen with milk production going forwards. And we typically see that anything over the 1.3 mark means that we're sitting in an expansion zone where farmers will continue to produce. If it drops below 1.3 and down to about 1.15, then we hit a stable zone where things should stabilize. And if we go below 1.15, then we should start to see some contraction. That's not the only factor. Feed price is obviously not the only factor. There's a lot of other costs that we would look at and that Ollie will talk about. However, it's quite a good indicator, just at quite a crude level. And you can see we're very much hitting, staying in that expansion zone for the time being. This is the latest DEFRA milk price data, which goes up until November. So we do know that we have fallen substantially from there. So things will be starting to come down. But as things stand, we won't yet have hit stability zone. So we're still in the expansion zone at the moment. And this isn't really, this situation isn't really being driven by cow numbers. So if we look across the year, if we look at the BCMS data, cow numbers are actually down by 0.9%, which is a continuation really of an ongoing trend. This trend towards high milk supply has been very much driven by yield rather than cow numbers. So what that tells us then is the expectation is that there will still be pressure with high milk supplies continuing going forwards. Processing capacity is already strained. We'll all have seen milk tipping going on over the Christmas period. So there are some quite strong concerns about what happens as we move into the into the spring flush if milk supplies don't come under control. And the question marks really is how quickly production will slow down. So even though some of those headline milk prices have come down an awful long way, some of those headlines are softened to some extent by what's happening with the composition of the milk and other things, which I'll come on to talk about. So if we look at milk constituents, it's not just about volume. Milk constituents have also continued to break records as well. So not only have we seen really strong milk, we've seen also record levels of both butterfat and protein content. So if you look at the green line, which is where we have been in the past year, and compare it to the 3-year average, we're well above where we have been and hitting a sort of all-time record on that really. Because of that, because farmers are getting bonuses for good fat, good protein, which is great, but it does mean that a lot of farmers will be receiving to some extent above what those headline milk prices would indicate, which is sort of softening some of the market signals to some extent. So because of that, we are thinking in terms of our forecast outlook that we will continue to see some degree of growth continuing really through to the flush time. So it'll be around about April, May, we'll start to see things moving into more negative territory and production to be back about 0.5% there. So we will start to see some decline, but we're not expecting a cliff edge to happen, really because of just where that milk to feed price ratio is at the moment, and our sort of expectations going forwards is that you know, we're not expecting to see a big growth in feed costs. So therefore, it will take some time for serious milk supplies to kind of be really coming down. We will be looking at the forecast again in March, and we'll have some discussions then as to, you know, where the latest market moves have taken us, and latest cow numbers, etc., and how that's affecting things. But the outlook for the moment is for a degree of stabilisation. So for the 2026-27 milk year, we're expecting to be about 0.5% down, but bearing in mind we're still at really high levels of milk, so that stabilisation still sort of keeps quite a bit of pressure on. The problem that we've had is it's not just been about GB milk production. So even though GB milk production's been very, very strong due to the economics of it, that's also been the case globally. So and a really interesting feature of this time round, you know, often we see milk production up in one country but not another. This time round, global production has grown strongly everywhere all at once, and that's continued really all the way through to December. So if we look at December figures, the EU's been up by 5.3%. The EU position's really been driven by very strong growth in markets like Netherlands, Germany and France, which are the markets who were most afflicted by blue tongue virus earlier in the year. And what's happened now is they've seen a good degree of recovery, which has happened faster than expected. And they've had a delayed calving and a delayed fertility really because of the blue tongue virus, which has really pushed up production through later through the autumn. So really strong growth there. The US are also seeing very, very strong growth at 4.4%. That's been driven slightly different set of factors to the EU. So in the US, it's been very much driven by cow numbers rather than yield. And they've seen an extra 250,000 cows being added to the US herd. That's really been driven by an increase in US processing capacity for cheese in particular, not only to produce cheese, but also to get access to the whey. The US is seeing really strong resurgence in demand for protein, driven by sort of healthier eating, but also GLP-1 drugs in the US, which have kind of enhanced that demand for protein. New Zealand also having a really good season, Argentina as well, up 8.1%, and Australia have been back for most of the year due to drought, and even Australia have come into growth. So everywhere just seeing too much milk. We're expecting to see the 2025 year end at plus 2.2% globally. Currently in the latest figures, we're running at an extra 35 million extra litres of milk globally per day, which is just an enormous amount. In terms of the outlook for the global outlook, we're expecting growth to remain strong in the first half of 2026 before easing as lower milk prices are taking hold. But much like in GB, it just takes some time for lower milk prices to really work their way through the system. Rabobank's expectation is for 2026 to stabilise in terms of milk production, but H1 2027 will start to see a bit of decline globally. They're expecting EU to really stabilise, and if not to come into decline, but still to see some growth coming from the US. In terms of our outlook for cow numbers, we are starting to see some dairy cow culling coming through. It's been interesting. If you look at the data on cow slaughter, it's been pretty flat. So we started to see a bit of an uplift in November, and it came down again in December. You know, not above, for most of the year, it hasn't been above the sort of 5-year average, despite the milk price pressures towards the back end of the year. It's interesting though that that is total cows. So actually, if you divide up by the suckler herd and dairy cows, it starts to tell a bit of a story, a different story. So we're actually starting to see an increase in dairy cow culling, which was up 18% year on year in December. That's sort of being masked, if you like. It's been disguised by the fact that the suckler herd is still very tight, and for that reason we've seen culling in the suckler herd actually reducing, which probably presents a bit of an opportunity in that even though we're seeing a lot of culls going off, we're not seeing the pressure coming in on beef prices at the moment. So the latest cow prices are actually at 502, and that's seen a little bit of recovery in the past couple of weeks, but really strong numbers compared to this time last year, which was about 350. And calf prices also very strong at the moment. So you know, but despite that, we're not expecting to see cow numbers really dropping off a cliff, but we'll be looking at how many have gone when we reforecast in March. So prices then, what has been the impact on prices of all this milk, and how long do we think this is going to go on for? And I know that will be a key question for many farmers. We have started to see some green shoots of recovery, which we're trying to sort of unpack the reasons for, and I'll try and talk about some of those right now. If you look at the GDT, so that's the global dairy trade, which is an auction which happens in New Zealand, but gives us a really good barometer of what might be happening in terms of global demand and global supplies. The GDT, you know, has been really in free fall for quite some time, but all of a sudden, as we went into 2026, the GDT rose 6.3% in the first auction of the year, then a smaller increase of 1.5%, and then 6.7% on Tuesday. So that could be some indications of a potential floor, possibly on some commodities. If we look at what might be some of the reasons for that, well, I think it's been driven by demand. So possibly some buyers, you know, from the likes of China, the Middle East, Southeast Asia, coming back to the market as, you know, they're feeling it's at the bottom and they've got positions to cover. Volumes were down in the latest auction as well, which is probably influential. And then there's probably some influence of the announced tariffs from China on EU cream and cheese as well, although those are now lower than were originally anticipated. But some positive noises coming there. If we look at our wholesale prices in the UK, we've sort of seen a similar-ish kind of pattern in that although we've been in free fall for most of the autumn and going through into the winter, we've started to see a bit of a difference in the January numbers, in that we saw a bit of stabilisation in some products. So the winner there was really SMP. So SMP went up £80 a tonne, which was a 5% gain, and then cheddar as well. Cheddar went up from up to excuse me, cheddar gained another £30 a tonne, which was only another 1%, but it feels like cheddar's gained its sort of floor. Cheddar seems to be more finely balanced, I think, between supplies and demand. There was a bit of tightness emerging, particularly in mature cheddar. And I think what happened towards the back end of last year, cheese manufacturers did sell an awful lot of curd and mild to really generate cash flow, and actually that's generated a little bit of tightness now, and the Irish aren't in the market at this time of year as well. SMP has probably been driven by a bit more demand, as we talked about, coming from some markets. We had the O'Neill tender, which is Algeria as well, which generated a bit of interest, and Gulf Foods as well, all happening at the same sort of time, which I think helped to push that on. However, it's a bit of a different story when we look at fats. So bulk cream really the big loser. So bulk cream falling to £1,185. Now, when we look at the peak of the market, that was well over £3,000 a tonne, and it's really continued to be losing. So in the last period, just losing 10% on its own. And actually, bulk cream's looking more positive than we're seeing on the continent at the moment, which is looking even worse just because of the bulk, the amount of milk that we're seeing coming through the continent right now. And that's also fed through into butter as well. And in our latest period, which was for January, butter sank to 3,600. And again, butter at its peak was going up towards £7,000 a tonne, which is a real blow, really. And because of the losses of all those commodity values, that's really driven some huge losses in headline milk prices in a really short space of time, because it's only really started to pick up and accelerate. We saw a few changes in October, but really the bulk of changes really started to happen in November, and some really big headline milk price falls. I think there was a record-breaking 8p per litre drop from one processor. And a lot of other processors have gone 2p, 3p, 4p, 5p's, sort of in chunks, with some contracts losing as much as 15p per litre, which is just an enormous amount of money to come off your bottom line. That's been really down to where dairy returns are, which have because of those values of falling commodity prices, then dairy returns have lost about 40% of their value. But the good thing to see, if we think back to what's happened with SMP and what's happened with cheddar values, is we've seen a bit of an arrest of that decline in the market indicators. So AMP sitting at 30.1. And McV sitting at 31.8. Yes, they're really quite low right now, but they have stopped falling for now. The question mark is, are we going to see this as the start of a recovery, or will we still continue to see some pressures coming through the flush? And the other question that this always comes up is well, what does that mean if you're supplying a liquid processor? Well, it's interesting if you look at the cream value to a liquid processor, which was sitting at about 18p per litre, and that's gone all the way down to 6.8p per litre now. What do we expect then to happen with farmgate prices? Well, the expectation is for average farmgate prices. If we plot that by looking at the milk market value, so we do that by combining the two market indicators together, so AMP and McV, we can plot that over time, and it correlates quite closely with GB average farmgate prices if you take out aligned, with a lag of about 3 months. So that gives us a bit of a predictive factor. And the expectation is for the average set of prices to fall to the low 30s. Now, I know some farmers are already there and are already below that. But you have to sort of think about the average from top to bottom, which is obviously not good news. But hopefully that we might have started to be approaching a bottom, depending on what happens with the flush. So another question then is, what's happening with demand? Will demand save us? Do we expect to see a resurgence of demand this year? The short answer is probably not enough, in that demand, dairy demand is pretty good, but probably not enough to soak up just the amount of milk that we've got at the moment. So this is just looking at dairy performance for 2025, so looking back over the last year. And it was a continuation of the pattern that we saw back in 2024, really, in that we've continuously seen a little bit of a shift away from liquid milk consumption. That's been to do with, a lot less people having milk as a drink, lower consumption of things like hot drinks like tea and coffee, people moving towards things like herbal teas, green teas, etc., that don't use milk. So we've continued to see a bit of a loss there. We've seen a massive gain for yogurt in the past year, so up by 8% in 2025. That's been really driven by really, really strong a resurgence of interest in health, I suppose, demand for protein foods, affordable indulgence as well. So yogurt's really ticking a lot of boxes there, which is really quite positive. Cheese also had a very good year past year, so up 2%. But you know, as we know, cheese is quite high in value, so that's really positive. Butter is the product that's seen a bit of decline, generated largely by inflation. But the interesting thing is, if you break down within butter, actually block butter has been growing really quite strongly. And we see the same for whole milk as well. And that's been driven by consumer demand for less processed products. So actually the types of butter and spreads, well, the types of spreads really that have lost value have been plant-based in particular, and you know, some of your kind of cheaper sort of margarines and things like that. Oh, and I should mention as well the other big winner last year was cottage cheese, which was up by about 40% year on year. The big changes then for 2026, it's a continuation really of the same. So similar picture for milk. Yogurt should continue to grow strongly. Cheese we're expecting to come up a bit as well, and a bit of a recovery for butter as well. What we're expecting to see there is, because we've seen such sharp commodity losses for both cheese and butter, that some of that will start to trickle through into retail. However, it takes time. We did some modelling work looking at this, and typically when we see a decline in commodity values on butter, it takes about 7 months for some of that to start to come through into retail, and it's about 11 months for cheese. But the expectation is that as butter prices start to come down to some extent, and by the way, you know, we won't see a sort of 40% drop off in retail butter prices. It will be much lower than that, but that could start to drive a bit of extra demand, which should kind of stabilise the butter market as well. And on yogurt and cheese, we're expecting to see those health benefits coming through really strongly, continuing. And also we've seen quite a big uplift in the UK on those weight loss drugs, so those GLP-1 drugs, nowhere near as much as we're seeing in the US at the moment. But I think our estimation is about 4 or 5% of consumers are buying into that category or are using those drugs, which will sort of push through demand for some of those products. We're expecting to see continued growth of premium luxury yogurts, and also more premium cheeses. And as I mentioned, price drops will start to influence things. And I just wanted to touch on longer term, because I think it's easy to think milk prices are really low. This is, you know, it's really scary. Is it worth being still in dairy? But just, you know, looking a bit more longer term, actually prospects for dairy are quite bright globally. We are expecting to see continued growing global demand for dairy products right the way through to 2033. That will be driven by an increased global population, but also an increased global middle class. So as people become more affluent, they tend to adopt more Western style diets, you know, things like pizza, bakery products that demand, you know, things like cream cheese, all that sort of stuff. We're expecting to see growth for. So opportunities there for cheese, for butter, and for some of the other products, both from actually developed countries and developing countries. So there is good opportunity if we can just get through the next sort of 12 months or so. So the outlook then, UK milk supply is still increasing too much, should start to fall after the flush, but still at high levels. Commodity prices might be approaching the floor. Still too early to say definitively, given what might happen in the spring flush. Fats are really under the most pressure, and it will take time to clear those excess stocks which are built up. So because of that, it's likely to be the second half of the year before we see a significant market rally. Milk prices then, we are expecting to remain low for a fairly extended period. They might stabilise, pick up gradually after the flush, but it's likely to be a slow recovery, and it will be variable by contract. The question is really how quickly those milk price falls will start to stem production. And as mentioned, some of the headline declines are offset by composition gains. We are seeing some really some B-pipe price mechanisms which are emerging, which you'll need to factor in as well. That's, you know, starting to raise some concerns around FDOM as well. And there is a lot of disparity out there between the top and bottom end of farmers in terms of what they can expect to get paid. Demand outlook, I think, is fairly positive, but it is overwhelmed by volume. So important to kind of really try and shore demand up where possible, and also exports. And we are doing a lot of work in that space. But longer term, the outlook is positive, with growing global demand and domestic demand for dairy protein, particularly, and unprocessed fats growing. So I think there's lots of scope. You can read more about that in the Dairy Market Outlook for 2026, which is on our website as well. I just wanted to touch on how AHDB will be supporting farmers. So we will be communicating the market situation ongoing. I mentioned DMW, which is one of our key channels. We'll be doing detailed monthly briefings with key stakeholders, including the banks as well, so they know what's going on and how they can best think about how best to support farmers. We're doing press interviews as well and social media. Laura mentioned the Low Milk Price Hub, but that is really aimed at bringing all the information that you need in one place. So both information on the markets and on business resilience tools. So please do visit. And please do contact ASCA as well if concerned about contractual issues as well. And the other thing that I should touch on is we are doing a lot of work in the demand space to support that demand. So we have our Milk Your Moments campaign, which is aimed at getting university students to recognise milk as a valuable sports drink. We've got our Let's Eat Balanced work, which is kind of more aimed at driving consumer recognition of milk and dairy products as a really valuable part of a nutritious, healthy diet. And we'll also be doing a lot of work on supporting exporters and helping to kind of get more milk out of the country as well. So that's all I wanted to cover. I know there'll be lots of questions, which we'll come back to at the end, but then I'll hand over to Ollie from Anderson's and Andrew, who are going to talk about the action that people can take on farm.